Stock futures opened higher Tuesday evening with a batch of solid quarterly corporate earnings results. More earnings reports are to come soon. So far, the relatively strong earnings results have helped support the S&P 500 pace toward a third straight weekly gain. Aggregate S&P 500 earnings per share are currently exceeding consensus expectations by 6% for the latest quarter, and the S&P 500 earnings are tracking toward a growth rate of well over 20% on a year-over-year basis. However, there are still concerns around inflation and the Federal Reserve's next monetary policy moves. We're surely not in the clear, as short-term interest rate markets are now pricing in a 40% plus chance of a sixth rate hike by year-end and a 35% chance of a surprise hike in March. So, while we look at the charts, be prepared for more volatility and perhaps some pain. And today we're going to take a look at two charts, beginning here with the 20-year monthly chart on the iShares Russell 2000 ETF, and the symbol is IWM. Now, we're watching the iShares Russell 2000 simply because the Russell, in my humble opinion, is leading the other indices. So whatever happens with this chart may happen with the S&P 500, the Dow, and the NASDAQ. And for the most part of 2021, the chart here moved through this channel, a relatively wide channel, but sideways movement is better than down movement, and we did get that down movement toward the end of last year and the beginning of this year. We're now resting somewhere near that 20 EMA, but I think it wants to fall further, perhaps to that 50 EMA. So let's take a look at the charts. Into the volume, it's not going to really tell us too much, but here the MACD is telling us that the fast line did roll over. Came up here, topped, and over it went. Now, the speed here is relatively quick, moving on down and slicing through the slow line. The red line is the slow line. So that slice moving on through here is pretty important, given that we still seem to have further downside to go. You can see here in the histogram pretty much the same thing. It rolled over and then sliced on down. Moving into these other oscillators, such as the price rate of change, again the fast line in the black is heading down pretty quickly. The slow line there, fast line here, pretty big separation, so anything can happen, including perhaps some sawtoothing up and down, but for the most part it looks like everything is heading on down. We're still above zero, both here in this chart as well as in the MAC, which means that there's still some power. However, I think there's more downside. Relative strength is weakening, 45.76 under the 50 or midline. A little fishhook here, but I don't think that's going to last like these didn't last. I think we're going to head on down here. Into the stochastics, shows pretty much the same thing. That fast line is moving very quickly on its way down. Into the Williams, we had this move here, but that doesn't look too convincing to me. I think there's a good possibility that we come on down here into that level below that negative 80. Moving back on up here, once again, you can see the sideways movement, and then all of a sudden the break, and through the floor we went, through the 20 EMA, and I think we're heading to that 50 EMA. Now, that's what the Russell has done. Let's see what it portends for the S&P 500. And we're now looking at the 20-year monthly chart on the spiders, the SPY. And as you can see here, we topped out at this level, heading on down here to 450. We're still above the 20 EMA, and of course we're still above the 50 EMA. But as I indicated, the Russell may portend to what's going to happen here in the S&P 500. So let's go ahead down here. Volume not much, but you can see here as we move into the MAC that definitely the fast line looks like it's rolling over. So heading on down here, not as quickly as the Russell, but quick enough. We're still above that slow line, but it's getting very close. If we do pierce through, I think we'll have more downside. And you can see here the histogram is doing pretty much the same thing, rolling over, heading on down. We're not below that zero line, but we're close enough. Same thing here in the price rate of change, relative strength index, the stochastics, and the Williams. Now, as you can see, the comparison, the S&P is behind the Russell. The Russell has already moved down in almost all of these oscillators. So that's what I'm concerned about with regard to the S&P 500 as well as the Dow and the NASDAQ. I think that may be in store for investors. So I'm not saying it's going to happen. I'm not saying we're coming into a crash. I think we're definitely in a pullback. Do we have further to go? I think the probability is about 50-50. So what I would do is sit on the sidelines and just be patient and wait and continue to accumulate your cash in case some opportunities arise. And for today, that's ChewDog Charts. Thank you.